Hi, Charbonneau Academy members. Russ Riddle here, Anomaly at Law. Courtney asked me to give you a few words, just a high-level view of the various entity types. I am a lawyer, but I'm not your lawyer, unless we agree otherwise. This is obviously for educational purposes only. Hey, what would a video from a lawyer be without some kind of disclaimer, right? Hey, one of the first most important decisions you're going to make in your speaking business is, do I want to structure as an entity or not? There's several reasons. Liability issues, tax concerns, and a couple of practical things. Some companies will not contract with you as a vendor as an individual. Larger corporations sometimes have a policy against that. Also, if you want to get investors, investors are not likely to give you money as an individual. They want more structure. And then if you go to sell your business or merge with another business, those buyers or mergers, they want to see an entity. So let's talk about four things. First, sole proprietorship. It's easy. All you do is start doing business. It's you. There's no formalities. There's no setup at the state. You're your own boss. There are some cons because it is you. You're completely liable for debts. There is no entity shield there. It is you. You have to provide all the capital. You're responsible for that. So if you have a debt or a judgment, they can come against not only your business assets, but your individual assets. What it says on that NSA sheet's not completely true, where it says they can come after you for everything you own. Obviously, there are homestead laws with respect to your residence. There are also, there's a list, a laundry list, for instance, in the Texas Property Code of some bare necessities that are exempt. But not much of a shield, but you are your own boss. Next, we have partnerships. Again, there's no formal setup at the state. There's no formalities to be adhered to. You get partners to help you capitalize, so there is that advantage. But the taxes still flow through to you, just like with a sole proprietorship. You are giving up some of the say-so when you have partners, because your partners get to help you decide things. So still, we don't have what we need to have that shield. Now, there's a couple of kinds of partnerships: general partnerships, which most are, and limited partnerships. With a general partnership, all the partners will manage equally unless the partnership agreement says otherwise. And by the way, that is the one formality I would suggest with a partnership, is to have a partnership agreement drawn up between you and your partners. Because what if one partner wants to leave? What if one partner has a divorce? What if one partner becomes disabled? You want to have those things outlined, how we're going to deal with that if it happens. So with the general partnership, everyone's pretty much equal unless that agreement says otherwise. With limited partnership, you have general partners, which is the same as a general partnership, but you have limited partner. By law, the limited partner can put capital in, but has to be silent as to management, has no say-so. But the exchange for that is the limited partner, what they're liable for is capped at what their capital investment was. So again, on the NSA sheet where it says all partners equally, not if it's a limited partnership. But if you really want to have a shield of liability, you need a true separate entity. So there we're talking about corporations and limited liability companies, or LLCs. First, the corporation. It is a separate entity. It files a separate tax reporting and payment. There are stringent formalities with a corporation. First, the setup. You have to file with the Secretary of State. Articles of incorporation. You're required by law to have bylaws, which is similar to a partnership agreement. In the bylaws, how are we going to operate as a corporation? You have to have an annual shareholder meeting. You have to have an annual board of directors meeting. You have to keep minutes of all your meetings. Resolutions have to be in writing. All those formalities that you have to keep it in a minute book. You keep the bank account must be separate. Everything must be run separate, or if you had a suit, they could pierce the corporate veil, is what it's called, and just say that the corporation wasn't ran as a separate entity, and then get to you personally. So you want to be very careful that you treat it separately. There's setup costs at the state, $300 or so to file the corporation articles. You probably need a lawyer to help you. You probably need to get the advice of a CPA. So that's corporation. Most are C corps. There are S corps. You can make that election if you have less than 75 shareholders, which you will. And there's some tax concerns there that you, again, want to talk to the CPA. Finally, there's the LLC. And I do a lot of work for NSA members throughout the country, and I can tell you that most have LLCs. There are some corporations, there are some sole proprietors, there are some strategic partnerships, but mostly LLCs. Again, like the corporation, it's a separate entity. It's run by its owners unless they, in the operating procedures, decide to say we want to have one manager do that, or co-managers do that. You can have managing members and non-managing members. But you have some separate tax filings you have to do, but the taxes do come back through the members or you as the individual. So there's not as much of a tax advantage with an LLC as there are with corporations. Now, the tax laws allow you to make an election for tax purposes only to treat it as a corporation, but you need to talk carefully with your CPA about that. So the thing with the LLC over that corporation is there aren't so many stringent formalities. But I advise my clients to still do written resolutions, written meeting minutes for when you make major decisions. That shows, hey, I'm treating this LLC very much different than me, the individual. Hey, that's a very high level of those 4 types of entities or non-entities, as the sole proprietor is not really an entity. You're going to need to know much more. I hope that this has given you an idea of what you want to do with your business, and I would certainly talk with you if you'd like. I can recommend other lawyers. I can recommend CPAs if you don't have one, but you need that for your business. You need that kind of professional consulting so that you run it properly. Hey, I hope you are enjoying this Charbonneau meeting. I hope you enjoy all your Charbonneau meetings. I was a member of Charbonneau, by the way, back in 2008. It was invaluable. It has proved to be invaluable to my business. It was well worth every penny. I should have paid more. So thank you for making the investment. You're going to be glad you did, and I will see you soon.